The Bitcoin difficulty adjustment may cause the price to plunge. Next on your 4-Minute Crypto Show. Today's show is from a post by Michael Kapikoff at Cointelegraph and brought to you by BitBlockBoom. The Great Bitcoin Conference is coming to Dallas, Texas in August. Now, this is a true Bitcoin event, not a crypto event or a blockchain event. So if you're interested in Bitcoin, please take a look at bitblockboom.com. I hope I get to meet you in person this August at BitBlockBoom. Now, on March 25th, the Bitcoin mining difficulty, it decreased. The last time a downward adjustment took place, Bitcoin's price plummeted by more than 50%. Bitcoin's difficulty is designed to adjust approximately every 2 weeks, and this adjustment is based on changes in the network's hash rate and occurs regularly in an attempt to ensure that the network continues to solve new blocks at a rate of 1 every 10 minutes. If the hash rate during the past 2 weeks has gone up, the difficulty, it's going to go up too, making mining more difficult. If the hash rate has dropped, the difficulty level will decrease, making blocks easier to solve. Now, decreasing is somewhat uncommon and is considered by some to be a historically ominous indicator for the price of Bitcoin. The last downward adjustment took place on February 25th of this year, when the price of Bitcoin, it was around $10,000 at the time. 3 days later, it dropped over $1,200, and by March 14th, Bitcoin was down 52%. Now, while this relationship could be a fluke, there's a rationale behind the trend. Downward difficulty adjustments completes the so-called miner's capitulation cycle. In short, let's say we're at a point where mining is highly profitable. This will lead to more miners joining the network, and that increases the hash rate, and as a result, the difficulty adjusts upwards, and the margins, they get a little thinner, but mining, it's still profitable, incentivizing more miners to join. Now, this cycle continues until a relatively large proportion of the miners, they just can't keep up anymore. Some are forced to liquidate an ever-increasing percentage of their newly mined Bitcoins, eventually depleting their treasuries. This causes an increased supply of Bitcoin for sale in the market. At some point, they capitulate and they even stop mining. The hash rate decreases, and finally the difficulty receives a downward reset. Philip Salter, head of operations at Genesis Mining, said, "It's no different from traditional markets. You have to sell everything to keep the operations going and to pay off your debts. As a miner, you have bills to pay. You have to pay for electricity and so on, and your expenses, they're due in dollars. So as the price of Bitcoin is dropping, you have to sell more of your Bitcoin just to keep going." Now, with this decrease in Bitcoin mining difficulty, the theory will be tested once again. So do you think the Bitcoin price is going to drop with this decrease in difficulty? Let me know your thoughts, as always, in the comments. And if you enjoy the 4-Minute Crypto Show, please take a moment and subscribe at 4minutecrypto.com/subscribe for a new episode of this show every weekday. Maybe give me a 5-star review or a great comment while you're at it. Those things help way more than you know. And don't forget to take a look at bitblockboom.com. If you're a Bitcoiner, this is a must-attend event. I'm Gary Leland, the Bitcoin Boomer, and thanks for joining me on another 4-Minute Crypto Show. This is a Bitcoin Boomer production.